Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. The title of the video is the dollar yen trading the last lap. Dollar yen trading the last lap. For traders who play computer games, all right, the racing games, all right. If you trade racing game, you know that what we call the last lap, okay, is the last part of the race. All right, so you have first lap. If you have 30 laps, okay, the 30th lap is the last lap. If you have 25 laps, okay, the 25th lap is the last lap. Okay, so for the dollar yen, okay, we are in the last lap. Let me explain myself to you. If you trade Forex, all right, or you are involved in the foreign exchange markets, okay, you need to pay attention carefully because the dollar yen is what we call a market indicator. Okay, it is a market indicator. Now, looking at the dollar yen, I want traders to pay attention to two key levels. Okay, the first key level is the opening price in 2008. That level is at 106.89. 106.89. That's the line here. What I'm going to do, I'm going to color that line into turquoise now. 106.89. Today, let's pay attention carefully, okay? The turquoise line. We are looking for it, okay? The price now in the zone of a 106.89, okay? You will see soon. Let's go to the should appear now on the, let's go to the 2-hour chart. We should be able to see now because it's somewhere here. 106.89 is somewhere here. All right. So going to go back again to my yearly chart and yeah, 106.89. That's the level here. I don't know why I can't see it on my. I'll go to the 4-hour chart. Hopefully, yeah, here it is. Now here my turquoise line. You see now. That's level here, 106.89. That's the opening price of 2008. The next key levels that we need to pay attention to is this level here, 110.68. That's the high of 2008. The last lap will take place between the level of 106.89 and the level of 110.68. Be ready for it. Will the dollar go up from the level of 106.89 to the level of 110.68. If the dollar failed to go above to find a support above the level of 106.89, it is very, very bearish. All right, so there is a high chance that the price may consolidate around the level of 106.89. And we will see a breakout and the price will run trying to retest the level of 110.68. This is the last lap for the dollar yen. The market, looking at the yearly chart, the market wants to bring the dollar yen to the high of 2008. As you can see, today we reached the opening price of 2008 at 106.89. The last lap for the dollar yen after the bearish season from 2008 down to 2011, the dollar yen was going down, which means the US economy was degraded in relation to the Japanese economy. So now the Japanese economy is looking at this currency pair. Pay attention, looking at the dollar yen because it's going up. Okay, just looking at this currency pair, it looks like the Japanese economy has been, okay, the US economy has been upgraded in relation to the yen. So in the previous cycle, it was a down move. Now it's up move for the dollar. But as you see now, that's what I'm talking about, the race in the last lap. It's going up, it's going up, it's going up. Now this is the last lap. This session here between 106.89 and the level of 110.68. Note those key level down. What I said to you already is that if you fail to find a support above the level of 106.89, it is very bearish for the dollar yen. but there is a high chance that the price will find support above the level of 10689 and continue to move to the level of 110, okay, 68. All right. You want to combine the technical analysis with the fundamental. Check Forex factory, okay, and combine the market sentiment with, okay, the technical analysis. What is happening now? Why the dollar is going up non-stop is because there is an outflow of money from the Eurozone and the British pound zone into the dollar. So money managers transfer, okay, fund from the sterling into the dollar, from the euro into the dollar. Why the euro? Because the euro has been, okay, devalued recently by the ECB by cutting interest rate to the lowest point in history. So this is a kind of money printing, and more quantitative easing will take place, all right, in the Eurozone. This is a devaluation for the euro. So as the euro is devaluing, okay, and there will be a money flow out of the Eurozone into a better currency pair where the market is expecting the interest rate to go up. You remember in 2008, 2009, 2010, when the Federal Reserve was cutting interest rate, was printing more dollar in the United States, there was outflow of money, outflow of currencies, outflow of dollar from the United States into Brazil, into India, into the Eurozone, into different parts of the world where the interest rate was higher. So wherever the smart money knew that soon there will be an increase in the interest rate, they will be positioning themselves, transferring funds into that zone where there is a chance that interest rate will go up. Where they notice that interest rate will go down, they will move money out of that zone. So recently we see that the euro was going down because the expectation that the ECB will start devaluing the euro, start printing the money and engaging in what we call quantitative easing. So that's why the market is now selling, okay, the euro, okay, and buying the dollar. The expectation that the Federal Reserve very soon will start increasing, okay, interest rate in the United States. The same thing was happening in the British pound zone, so to speak, in the United Kingdom here. But another element that has changed the dynamics of the pound-dollar currency pair is the independence of Scotland. As I explained to you already in the previous video that I called 20-minute Forex analysis, all right? I was telling you that on the 18th of September 2014, we will have the referendum. If they vote yes for independence, the pound will go down more. And I already mentioned that. If they vote no, the pound will recover. So though the expectation also for the money manager is that the Bank of England very soon will start increasing interest rate in London, in Great Britain, United Kingdom, all right? But the situation of Scotland has changed the dynamics of the market. As I showed you already, the pound is at the pound-dollar currency pair is at a cycle point, okay, the level of 16161. Watch the video that we call 20 minutes Forex analysis to know more. All right. In this video, we are talking about the last lap of the dollar yen. This time we are comparing the US dollar to the Japanese yen. You need to understand that this currency pair is distorted at this point in time. All right, you have to understand that because in normal condition, the pound dollar, the pound dollar currency pair, the euro USD should be going up, but something else has happened. Most of the time, what I have noticed is that major central bank usually make their decision at the wrong time. It's something strange. I've seen it all the time. They make their decision at the wrong time. Few years ago, in 2010, in 2009, in 2011, I was telling traders at Joe Trio channel that the euro has been manipulated. What was taking place is that Mr. Trichet was putting up interest rate when he's supposed to put interest rates down. Now, the cake is baked, and leaving Mr. Draghi, which is the current ECB president, to cut interest rate at the wrong time. So this is what's going on all the time, okay? The Japanese, okay? The Bank of Japan, when the United States was cutting interest rate, they should have done exactly the same thing, and the Eurozone should have done exactly the same thing, as I was telling traders in 2009, in 2010, in 2011. They did not. Now, the music has changed. They have to at one point. What I was explaining to traders at that point in time is that the market is fractal. The fractal pattern is a powerful tool to make excellent decisions and to forecast the next price move. What is happening, the timing of the decision made by the central bank, we can work with it because it usually takes place at the wrong time because they don't understand what is the fractal pattern and the fractal nature of the market until somebody at one point mentioned this to these people because they don't know anything about the fractal pattern. So now, in normal condition, what should have taken place is that the Euro USD should be going up and the dollar should pull back a bit. As I explained to you in the previous video that I call my take on the Forex market. I George Rio channel, my take on the Forex market. So they did not, okay? So the dollar, we were expecting it to come down minimum to the zone of 9000, even down to the level of 800, okay? So the minimum is 9000. It did not. As you see here, it was coming down to this point. Quickly, the market started buying with the expectation that the Federal Reserve will start putting up interest rate in the United States. It did not. Since, God knows, last year, around May 2013, they were expecting, and it did not. All right, so this is what's going on now. But notice something strange now. Notice something strange, all right? Now, the Eurozone start cutting interest rate. Soon they will start what we call a quantitative easing, asset purchases, which is a kind of money printing big time, all right? And the Federal Reserve so far did not put up interest rate. Because, in my view, the market is distorted, the dollar should pull back. Now the dollar is going up. Okay, we can force it. We can stand against it. It's okay, all right. But it's going up at the wrong time, and the dollar, the Euro USD is going down also at the wrong time. What's going to happen? Ladies and gentlemen, pay attention to what I'm going to say now. What is going to happen is that soon, as the dollar is going up, we'll start seeing more bearish economy data out of United States. All right? Because the economy has been recovering for some time now, but what is likely to take place is that very soon, it's not certain, we are likely to see, a kind of bearish data out of United States. If that's not the case, something else may happen, is that we will start seeing more bullish news, more bullish economy data from Japan. One way or another, either bearish economy data from United States or bullish data from Japan. As we see more bullish data out of Japan, that will force the dollar yen to come back down. Why? Because it's going up at the wrong time. It doesn't mean that the dollar yen is bearish, as I explained to you. We are in the first wave, we are expecting the second wave before the third wave. As this move is continuing to go up now, we are in what we call the last lap. The last lap is the last part of a race, okay? So the race that has started going up, we are in the last lap. We knew that the dollar yen was going down from 2008 up to 2011, and it started going up. Since then, from 2011, it started going up. Now, this bullish momentum is coming into the last lap. Traders need to pay attention carefully. There is another level that I want to highlight here for traders. It's the level of 1145. 11145, 11145. Note it down. That level is above, the level of 11068. All right. So we talk first about the level of 10689 up to the level of 11068. But above the level of 11068, there's another level, 11145. Because the market has been very, very bullish, suppose it continues to go up as it did now, all the way up to the level of 11068. There is a high chance, if it continues to go up during the last lap like this, all the way to the green line 11068, there is a high chance that as the dollar is approaching that level of 11068, the Federal Reserve may start putting up interest rate. You want to remember what I just said now. If the dollar yen continues to go up and it reaches the level of 11068, there is a high chance that the Federal Reserve will put up interest rate. And that will create what we call, okay, a surge in the bullish momentum. But that surge is likely to be temporary, which means the level of a 111, the level of a 11145, 11145, 11145 is a major resistance zone for the dollar yen. Few years ago on YouTube and also on Twitter, on Facebook, I've seen a lot of videos recorded by some professional talking about the dollar, okay, that the dollar will fail and will go to zero. I do not believe that the dollar will go to zero. There may be a correction or a change or something may happen, but I don't expect it to go to zero. There were videos also on YouTube about gold going up, okay, big time, okay, that one can purchase gold at $2,000, at $3,000, at $5,000, at $50. The dollar will go, the gold will go up to $20,000. These are very, very pessimistic, forecasts. If gold is going up big time, it's alerting us that the market is very, very bearish. All right, so there will be outflow of money, outflow of value out of currency into real asset like gold and silver. So what is going through my mind at this point in time, talking about the last lap or the dollar yen trading at the last lap, okay? This level of 11145, we need to watch it carefully. We don't want to forget it. I don't know why, because the last lap is between 10689 up to the level of 11068. But where we are now at in the zone of 10689. We need to watch it. It may find a resistance here, which will be better for the dollar. It may find a resistance here and start pulling back straight away. But watch that level carefully, the level of 10689. Watch it carefully. It can either go up or go down in this zone here. And watch it carefully. Watch this level 10689, 10689. Write it all over the place so you may not forget it, okay? And remember everything that I've said to you now. But if the dollar continues to go up and reach the level of 11068, remember that there is a high chance the Federal Reserve may put up interest rate. Again, as I explained to you, they make that decision always at the wrong time. All right? Because it's coming to the end of the last lap. As we have seen recently, the Federal Reserve and the central banks around the world are making their decision always at the wrong time. Mr. Trichet in the Eurozone was putting up interest rate at the wrong time instead of cutting interest rate. Now, Mr. Draghi is forced, it's known that Mr. Draghi, the current president, is making a bad decision, but is picking up the pieces left by the previous, president of ECB. Because they have not cut interest rate before, now Mr. Draghi, the current president, is forced to cut interest rate, and he's cutting it at the wrong time again. All right, he's cutting it at the wrong time, and that's what I'm saying to you, that watch it. If the dollar reaches the end of the last lap, and in the zone of 11068, there's a high chance that we may see suddenly that the Federal Reserve may come up and put up interest rate, forcing the dollar to jump into the zone of 11145, which is a key levels. This video is about the dollar yen trading, the last lap. I hope you have learned something from this video also, and we put into use to make a smart Forex trading decision. Until the next time, enjoy yourself and be very happy. We are the TSTW at 24 traders. Speak to you soon.